Hello guys, welcome back to my channel. This is me, FX Academy, and I want to say thank you for clicking the video, right? So I have an amazing video for you today, and today, depend where you are watching from, we are going to be trading Jump 25. I'm going to break Jump 25 down, right? As you can see, I have my lines already drawn, so I really don't have to waste your time right here. I'm just going to tell you, and as you can see, I have a trade running in the background. I'm just gonna tell you why I entered that trade, what I saw, what really did I see before entering that trade. I'm gonna be telling you, I'm gonna be explaining that in this video, and I'm gonna be showing you some little tricks and psychological men I always said, right? And if you're gonna watch to the end, I have an amazing offer for you. I have something great for you because this is a new month, and this month is my mom's month, right? So with that all, I have an amazing offer for you, so you really want to watch to the end. So without wasting much of your time, let's dive straight into this video. So I've been training Jump 25 like for the longest, right? And I pretty like understand this trade kind more than others. Like I literally kind of understand this the more. Like I'm really comfortable trading Jump 25 really very well. So if you check my previous video, I actually anticipated this whole move from point A here all the way to point B. Yes, the whole of this I anticipated it. Also not that I anticipated the whole of this move from point A all the way down here to point B. So you can literally imagine you placing trade and holding for a very long time, this long. And of course, Jump 25 is kind of volatile, right? It's a kind of volatile indices, right? So I anticipated all of this move, and if you're going to check my previous video, you're going to confirm that all by yourself, right? So but I'm going to go ahead to give you a brief intro. I'm going to go ahead to give you the summary of what I saw that made me to anticipate all of this move all the way down and all the way down, right? I'm going to give you a brief history, and also not just that, I'm going to show you the tips and what I saw in entering this trade, right? Let me show you something really fast. As you can see right here, let me go to 1 hour. As you can see right here, I have a sniper entry right here. Can you see that? I have a sniper entry. This is the blue band. This is where I bought, and you can see the peak where I entered the trade. I've already broken even on this trade, and you can see the trade is actually healthily going up fine. My data is presently off, so this trade won't be messy, right? This video won't be messy. So I'm going to show you why I entered that trade and how I entered the trade. So all you have to do is just to sit back and listen. You can get one or two things to add to your strategy on why you're trading, or some few things you can add while looking out on your trades, right? So let's dive straight into this video. So first of all, how did I really anticipate all of this move, right? So before then, I know that the trade is actually going up from a support zone, right, going up to the upside. So what I did, because I know that the market is already exhausted, right? I know for a fact the market is already exhausted. So this is a higher high, so you will not expect the market to come down a little to form the law that states once a resistance is broken, the next one coming down has to respect it to act as support, right? So you won't expect this market to do what, to come down a bit to just rest on this, right? So and when I saw that the market just broke through this support, I know for fact that this market is exhausted. What did I then do? Then I drew just a single line. I drew a single line like this, right? I did this pretty nicely, very well. I did this pretty nicely. So I drew that, and I know, okay, because the market was still like above this trend line, and split. I prepare before time, right? That's how I really trade. I prepare before time, so when you get there, then I know I have prepared, because it's only when an opportunity meets preparation that is actually success, right? So I prepare before time, so the market was actually here. So when the market broke the trend line, I'm not just rush to enter the trade, because I'm going to give you this analogy. For instance, you are painting your room, and when you dip the roller inside the paint, like the bucket of paint, the first roll on the wall, you will discover that that roll is actually the much, is the much plenty, excuse me, is the much than the rest, right? You won't just let that one be like that, are you are going to come back to balance it, so all of them will be level, will be of the same quantity, right? So this is what happens on a trade. So not because the buyers has losing momentum and now sellers is in control, that will make the market to just rally all the way to the downside. No, it's going to come back to find a balance in both. From here to here is equals to from here to here, right? So that's what the market always do. And now coming back is also like a retest on this trend line. Don't forget we have a trend line here, right? We have a trend line here. So coming back now is like a retest on that trend line. So I won't just focus on the trend line. What did I do next? Because if those that have been following me for the longest, I like trading with confluence. I like adding 3 to 2 confluence on a particular region before I will go ahead to find entry strategy on that particular place, right? So now we have this point right here. This was a resistance, right? And this was a support, because the market broke, come back, this was a support, then break. Don't forget, once a resistance is broken, it tends to act as support, and once a support is broken, it tends to act as what? As resistance. So this is the law of support and resistance. So if you don't know, you can write that down. So this is the law of support and resistance. So now a resistance was broken, tends to act as support. Now a support was broken, it has to tend to act as what? As resistance. And this is also a 50 of the balancing of all this, of the momentum. So that is why the balancing of the momentum is what we use Fibonacci to do, right? So yeah, so right now we have it. Okay, it's not touching. Okay, let's just go ahead, or let me just do it very right. So right now we have it touching the 50 Fibonacci retracement. So I will then, what I will then do now is to take the support and balance it with the 50 Fibonacci, right? Now very good. So now you can see it, we have what? We have the first thought, we have the break of this trend line, we have the break of the retest and the retest of the trend line. Do you understand? Secondly, we have this resistance was broken, tends to act as support. The support was broken, it tends to act as resistance, and this is the 50 of balancing the momentum change, right? The momentum change, this is the 50 of balancing it, also corresponding with what? Our 50 Fibonacci retracement. So that all those confluences made me to look at that point as a reasonable point of interest, right? So I'm just going to go ahead to delete all this stuff because I don't want to make the chart messy, so it won't go ahead confuse you, right, as we learn together. So I'm just going to go ahead, delete the rectangle bar, delete our Fibonacci, and that's fine. So that alone made me to see this point as a point of interest. On the market getting here, I went down to the lower time frame and found entry strategy around here, right? So the main thing is what we figure, we have already break down the higher time frame, we know where the force is right now. So most people now, we're going to, as most people seeing this double top, right, double bottom right here, they'll say wow, this is a good support. They might want to hop into this trade to rally back to the upside, but what happened? The market failed. So this is why you have to be technically good in your trading, right? So now that's where I anticipated all this move all the way to the downside. So secondly, how did I anticipate this move? Now coming back from here, we have a left shoulder right here, we have a head, and we have the right shoulder. And I want to teach you something right now, that once you are looking for, you don't find any chart pattern at a middle of a trade. Do not find a chart pattern at the middle of the trade. You only find chart pattern at a key level. You understand? So for instance, the market is going to meet a support, a part that was a resistance, so you want to tend to act as support. What you're going, that is the only place you'll be looking out for a double top or a head and shoulder. right? Because that's the only place that it is relevant. For instance, this is a key level and now the market is going up to that point. That is only when the key level, the head and shoulder or the double top is relevant. If it's coming down to a support, that is only place you'll be looking for a double top, a double bottom, or inverse head and shoulder, right, to go back up. So those are the points where you'll be looking. You will not want to go in a lower time frame and finding those double top and double bottom along this trade here. It might not be effective that much, right? And the second thing I want to teach you right now is that once a double top and a or form on a key level, or a head and shoulder, or an inverse head and shoulder, or a double bottom form at the key level, it always almost goes back to where it originated from. I'm going to give you an example. For instance, it started here. We have this as the first leg of the left shoulder, the head, and the right shoulder. So I know for fact that with from experience, it usually goes back to where it originated from, and as you can see, it went back and stopped at where it originated from. So now we have the red, we have all these met. So coupling with facts with this entry we have here, right, with the entry you have here. So this is where I was anticipated to up out from the trade, somewhere closer to here, somewhere about here, right? So that's how I anticipated the whole of this move. Now the market was then rallying back, so I know from this rallying right now, the next part of interest, I told you earlier in this video, what I do is that I prepare before time. I will prepare where is the potential place, so when it gets there, I will then start looking for what I'm looking for. You understand? So I won't get confused and maybe the market isn't there yet, I hope to the lower time frame and I might find something tempting to hop into the trade, which will result to losing money. So I'm speaking out of experience. Sorry about the battery. I'm speaking out of experience right now. So I prepared before time. So this is what I did. The market was then rallying up. I anticipated, okay, where is the next part this market is going to get to and stop. So figuring out, we have here the support. I'm going to draw it right here. So we have a support right here. We have a support right here. You can see that, right? So we have a support, we have support, we have these are supports, these are supports. So the market rallying back up, I know for fact that okay, this is the next part of support, because even if this market is going to kind of blow up here, like this part never exists, it's going to at least come back to the 50 points. Remember, this is also a momentum change, right? This is a momentum change. So for this market to blow off here, it's going to at least respect the momentum change and come to what, 50 retracement. If you don't get back, you can replay the video. What I mean is that, remember I make analogy with what, a painting has to come back to the 50 retracement. So even if you are taking a support here, it has to come back to 50, and by then you would have broken even, right? For a reasonable trader like that sticks on the primary principle. And what's that primary principle? Capital preservation. So I and any other trader experienced, we want to what, break even, and this is the daily time frame. It takes days for all this to form, right? So even if I place a trade here and the market want to do something else or blow up, it's going to at least come down a bit before going. By then I would have broken even and might maybe take out something out of the trade. So this is the next point I was anticipating the trade to get to. And of course, this is also the third touch of the trend line. We have one here, we have another one here, then where's the third one? We have it here. So this is the third touch of the trend line. So now this trend line coming down, because this is now a downtrend. You can see this is a downtrend. And again, if you want to check it based on break of change of market structure, we have the we have the higher high, higher low, higher high, coming down to do a double bottom. Then what happened? Failed to break the market structure. Then what happened? It has to come back to retest. Do you understand? So in any way you are coming with it, we are all saying the same thing, right? So the main thing is just for me to add confidence to what I'm saying. So now we have number one, have this support, we have the trend line. If we are going with break of market structure, we also have the same thing. So coming again, adding the Fibonacci retracement to see if that we add to a confluence, right, from swing high. Once the market is in a downtrend, you draw it from swing high to swing low to get the retracement, right? So we call it A, B, C, then the D is always down. That is the tick profit you are seeing. Let me show you. That is this tick profit you are seeing, target. So that is actually the D. And if you want to get that D, is actually when you want to edit your Fibonacci and put minus 0.27. Minus 0.27. Yeah, that's the target, and that's where most trade goes for take profit, right? So that's by the way. So you can see the market is actually at 61.8. So all these confluences met plus the consolidation you are seeing around there, so gives me an interest in that particular region that this market is likely to go 80% to go to the downside. So what will you do next? You then go back down to lower time frame to find all those chart pattern you are looking for, like your candlesticks pattern, whatever you're looking for. That's the only place you then apply it. Do you understand? So that is how I anticipated the whole of this trade all the way to the downside, right? Because I know it's going to come down to 100% retracement, and you can see this peak. I should be out of the trade, right? So that is how I anticipated the whole of this trade. Now that is, I'm just giving you a summary of how what I said in the previous videos, right? So now I'm also in this trade. So what did I see that made me hop into this trade? If you're enjoying the video so far, please like the video and subscribe. That is the only way to support me. And you can comment below if you have any issue while trading, and I'll see to it. And don't forget, I say I have an amazing offer at the end of this video. You really want to stick by, right? So I say I have a trade running, and it's a sniper shot, a sniper entry. So let's go. Let me tell you why I entered that trade, right? So let's go to 4 hours. Basically, before we head down to 4 hours, as you can see, we have support. We have support right here. We have support right here. Do you understand? We have support right here. So on this market approaching this support, you don't expect, I won't expect the market to just blow off these hurdles right here without even respecting them, and going their direction a bit, even though, right? So even though the market want to blow, at least you have to go to 50%, which is around here, or maybe somewhere closer, right, before going back down. So that's what I'm looking out for, and I know this market will have to respect a bit. And as you can see, I have already broken even on each trade. So this is a risk-free trade, right? This is a risk-free trade. So that's why this is the support. These are the support I saw. I say, okay, this is a key level. This is a key level. So then what do? I go to 4 hour. I went to 4 hour. Let me zoom in. Now you can see it. We have the first touch here. We have all these touches and join to the second one, and extend to the future. Now you can see the break of it and retext. Then you can see the market going with this full momentum. I know most people will be scared to enter the trade. Man, this momentum is too strong, it's going down, but I went against it, and because I know what I'm looking out for. Then you can see the market pushing. You can see this is a full momentum ready to keep going up, but my data is presently off, so that this video can be audible to YouTube for you to listen, right? So and we have that number one. You can see the break of it, and I was talking about momentum change, right? You can see the momentum change right here. You can see the momentum change right here. So it won't just break and keep going up like that. It has to balance it before going. That's two. So now checking also, you have the left shoulder right here, we have the head. Now this is the right shoulder. That's three. And if you are actually going to look at this trade with other block view, right? You want to look, if you are other block trader, you want to look at this trade through other block. I'm going to discuss, I'm going to let you know that we are all gonna see the same thing. We are all gonna see the market the same way, right? So now let's do it together. We have this as a break on market structure, right? This is a kind of a break on market structure, or you can call it a change of character, right? We have a break. Now we have the okay, we have the lower low, lower high, lower low, right? Lower low, then we have the lower high, right? Lower high, okay, lower low, lower high, right? Then what happened? We have, then you can see the break, which is this particular candle broke the market structure. Then this one now is now considered our lower high. Then what then happen? I won't consider this as a lower high. Why? Because this didn't break market structure. It didn't break market structure. So this is a double bottom, right? So this isn't a lower high. So this is only candle that broke market structure, and the next one also breaks it, the market structure. So let me go ahead to zoom my chart so you can understand what I'm saying better, right? Okay, let's chink it a bit very well so you can understand what I'm saying better. So this is a double bottom right here. So this is the candle that broke market structure. Do you understand? This is the candle that broke market structure, or continuation of structure, whatever it means. So this is the candle. The next one also broke. Then this one, we have this inside bar right here. Now it didn't break the market structure, neither did it retrace above the previous high. Do you understand? It's just in between them. So that is now considered at what? Our lower high. Do you understand? Is now considered as our lower high. Then break. Before you know, we see the market change market structure, and you can see the full momentum. All of them are breaking highs. Do you understand? All to the upside. Then what then happen? The market has to come back and retest it before going back to the upside. And in confluence, this retestment, right, is in a 50 balancing of this momentum, as I said earlier on, right? Is a 50 balancing of the momentum. If I go to 1 hour, you see that that point is actually a zone. You can see it right here. You can see it right here. This is the lower high. So you can see the market coming down to that point. And I think I have to zoom in again. So I want to really show you the sniper entry. Can you see it right here? Can you see the peak right here? Bam. And the market did what? Retrace all the way up. So that is how, right? That is how I got this particular entry. But I actually got this entry on the 15 minutes, not on the 1 hour. Right? I got that entry on the 15 minutes, right? So that's what I really did on the jump 25. So that's said that about that, right? So one thing I want to tell you guys, because most people are trading everything. New traders are always eager to be on a trade. They want to just see a trade running on the background. Yes, they want to keep learning, but to me, you don't learn that way. You just have to choose 2 to 3 pairs that you really love, that you want to learn how to trade. Even if they are not giving you the confidence, you can just go ahead to swap or whatever means you wish. Choose only 2 or 3 pairs you want to trade. Now I will teach you something, that to be selective is actually to be effective. If you want to be really effective in anything about life, you have to be selective. Even during trading, even me as a trader, not every opportunity given to me by the trade I will trade, because I have to be selective to be effective. Do you understand? So you as a trader, you have to select the pairs you want to do, because I will teach you something, that each of these pairs have their own character. They have their own behavior, right? Most pair, like how we saw now jump 25, they love break and retest. So most break of trend line traders now, once they break, they want to hop into the trade, not knowing is going to might come back to retest. Do you understand? And most traders now, once they see a retest of a support, they want to go back, they want to start trading, not knowing the trade likes to do double top or double bottom on a support level, irrespective of the time frame. So each of these characters are what you trading them consistently, you will discover them time to time. And I'll tell you the thing for fact, that if you are actually selective on your pairs, on your trades or whatever it is, you will be more effective than people trading anything they see. Because you, once your 2 or 3 pairs gives you an opportunity, you can leverage on it, you can maximize the move, because you'll be rest assured that the trade is 90% going to go your way, right? And you make more money than people that are actually gambling. So actually just go ahead, select the pairs you want and stick to them. And I tell you, give yourself at least 30 minutes every day for like 3 months. You'll be amazed on what you become, right? So it takes consistently to gain mastery, and never be in haste. Don't be in hurry. Calm down and do it, and you're going to do it right, right? So that is how I come to the end of this video. If this video is anywhere helpful, kindly like and subscribe. And for those that are still sticking by, I say I have an amazing offer for you, right? I have an amazing offer for you. So, and I said this is a new month, and this is my mom's month, right? This is my mom's month. So actually I've been running a mentorship for over 6 months or so, right? So it's actually now presently $20, right? Which is about 14k in Nigerian currency, 14,000 naira. So but right now I'm organizing a 3-day powerful summit conference, like a 3-day program where I'll be teaching you how to trade, how to see the market the right way, the way I see the market. Like for instance, a jump 25 that looks like a double top, double bottom, that was actually cooking up for a break and a retest. So most people, so for you not to be stopped out in such trade, to view it the right way, right? And I'm also going to be teaching you how to also trade my strategy, to know when to trade, might be maybe other blog or normal trading, irrespective of which, we are going to say the same thing if you have the same perspective, right? So I'm going to be teaching you the how I trade, how the strategy goes, right? I'm also going to be giving you a PDF file at the end of the class that will help you, so you can have something to reflect on your memory, so to keep you going consistently, right? So and I find out that most people coming to my DM already know how to trade. They know how to trade, but their problem is actually how to get that specific entry, like to know when to buy and when to sell, like what you are seeing on the screen right now. To know when to click that buy, when to click that sell, and when to exit the market, right? So I think I'm going to be showing you how I do that, right? I'm going to show you my daily routine, not actually daily routine, because I don't trade every day. I trade when trade is actually available, right? If that makes sense. So that's what I'm going to be showing you at the end of the class, the 3 days class, right? So and it's going to host from Thursday next week all the way to Saturday. I'm going to be giving practical alongside. So that's how the class is going to go. And again, we are in end of the year, and many people have screenshotted a lot of things they wanted to buy and they are not really buying them. So this could be an opportunity. Imagine you, because of this class, making 50 to $100. Obviously, as you can see, most of the trades I close here are worth those amounts, more than amounts, or worth those amounts. And imagine getting $150 weekly just by trading the principle and the rules I'm going to teach you. You can see from my trading styles, they are all simplified. I don't like complicated issues. I don't like drawing lines all over, scattering my charts and all of that. I don't like that. I like it being simplified. So imagine you doing that simplicity and getting earning that much, right? I think it's going to go a long way. So if you really want to join the class, it's going to be Thursday, Friday, Saturday. Please don't forget Thursday, Friday, Saturday. And I'm not going to charge you $100. Most people, yeah, even if I charge you $20 back, or even more than, it's worth it, because most people are actually charging 100. Some are going 70, 50, 40, but I'm actually charging $20 for mentorship, right? And actually none of you coming to my DM is complaining, but actually they are just pleading. So but this time around, I bring the budget so low so that everyone can participate. So I'm not going to charge you $20 like I used to. Neither am I going to charge you $15. I'm not going to even charge you $10. Nah, I'm just going to charge you 5,000 naira. if you die is $7. If you have 5k, I am just going to accept the first 20 people. I really don't want the group to occupied, right? The first 20 people to come, the early birds to come, 5,000 naira to keep their seats. We are going to kick off on Thursday all the way to Saturday, and you get your PDF file at the close of the meeting on Saturday. So that is it about that. My number, if you actually interested, is going to be in the description box. You can message me on WhatsApp and get you registered, get you into the group where we get beginning. So that's it about that. Thank you for watching and have a nice day. See you in my next video. Bye.